Good morning. It's Friday, December 8th. Non-farm payrolls have just hit. I am Mark Sebastian. I'm joined by Licia Leslie. We are
Good
going to
morning.
break down everything you need to know about markets today. So in today's show, we're going to be hitting with analysis of non-farm payrolls. We're going to be talking about market charts with Licia. We're going to talk about some of the important news stories hitting today. We're each going to break down a trade we like. We're going to do a little bit of education, some order flow analysis, and kind of get you prepped for the rest of the day. So, like I said, my name is Mark Sebastian. I am the founder of OptionPit.com. I was a floor trader on the Chicago Board Options Exchange and the American Stock Exchange for about a decade, and I've been a professional trader off floor for an additional 10 years. And my co-host is Licia Leslie. Licia, good to see you. Good morning.
Good morning. Good morning. Nice to be here. My name is Licia Leslie. I work with Mark Sebastian at Option Pit. I'm a former SIBO market maker many moons ago.
Yes. Well, Licia, obviously, let's hit with the elephant in the room: non-farm payrolls. Let me read you what the numbers look like. U.S. non-farm payrolls, November, 199,000. The estimate was 183, previous 150. Unemployment rate, 3.7. The estimate was 3.9. Highest labor force participation rate since February of 2020.
Wow.
Average hourly earnings. This is what caused, I think, markets to drop. Month over month, average hourly earnings up 0.4%. The estimate was 0.3%. And year over year, in line 4%. But they really did not like the initial jobs report there, did they?
No, we were down over 20, I believe, and now we're coming back. We're only down 12, it looks like. What's good is bad, correct? The economy, they don't want the economy. They don't want people to make money and spend money any longer.
Yeah.
You want to bring that inflation down. Oh, here, we're only down 10 now. We're coming back.
Yeah, I mean, I didn't think it was the number was a little hot, but it wasn't incredibly hot.
Right.
But what I thought was kind of interesting is the market is not the economy, and the two don't always align. And that's something I think people forget about. The market cares more about interest rates going down than it does about you having a job.
For sure. For sure. The interest rates are what it's all about right now in the markets.
Yeah.
For the longest time, we didn't have any to even worry about, right? Or think about.
That's very much true. I mean, one of the things I think people don't realize is that the rate we're at now is the normal, not the outlier.
Oh,
right.
I'm here with my mom and dad. My mama says, I don't feel sorry for anyone because we paid 16, 17, and 18% on our mortgages and our home, our car loans and everything else. And you go out there and you hustle. I don't feel sorry for anyone crying about this.
No, and
that's what my mother said.
And they shouldn't. Rates are not that high historically. Here's an update on where futures are. They're currently trading about 46.33. Reminder, I believe today is the day that futures rolled over.
Yes,
so
Monday. Well, Monday will be trading March.
Okay, so this is still December.
Right, Monday will be trading March.
Yeah. All right. Yeah. So, but what I'll tell you is that futures definitely didn't really like the move. We're trying to threaten 46.25. So, Licia, that's kind of the big earnings. We've got some other big stories that we want to hit on, but I wanted to move on to breaking down a couple of charts. And let's let these non-farm payrolls play out here for a minute or two, and let's take a look at some charts with Licia. Licia, we like to call her the queen of the candlesticks.
I will.
She is an expert on chart analysis. So Licia's had multiple careers. She was a market maker, but she was also a commodity futures trader. And if you're going to trade commodity futures and you don't know technical analysis, you are going to get your shirt handed to you.
That is so true.
She picked that up from And so she's one of the few people that you're going to ever really meet that are chartists that also are, top 1% in the world for understanding derivatives. So top 1/10 of 1%.
Well, there aren't too many option traders out there, are there?
Well, but
we're growing.
You don't see chart experts that are ex-market makers very often. And that's what I think makes Licia so unique. So, Licia, why don't you walk us through what you're seeing? You're going to hit on SPY to begin. So what are you seeing in SPY?
Well, I'm seeing as we have tried 7 times now to break through the resistance we've had created by the previous high back here in July. And each time we come to this point, we aren't able to break through it. But we also aren't rolling lower. Each time we roll lower, like Wednesday, we come roaring back on Thursday, right? So this is called a consolidation. And this is just the market gearing up, taking a breather. And usually in this consolidation, the Japanese call it a box range. Once we break out of there, it's usually to the same direction from where you came. So most likely we will probably bust out over this resistance. We could roll over though. We're battling this resistance. The bulls and the bears are out there battling it right now for the last 7 sessions. Now today, we'll see what happens today.
Yeah, there's today is going to be interesting. I'm really interested to see what direction the market goes at. So that's interesting on SPY. So basically what you're saying is like it's kind of figuring out what it's kind of biding its time, and then at some point it is going to break out, and when it does break out, it's going to be nasty.
Generally, when you have Sorry?
I said, nasty doesn't necessarily mean we have to drop. I mean, it means we can get a nasty rally or a nasty sell-off.
Yeah. We can definitely. Yeah. So usually when you have this consolidation, you'll get a big move once it breaks out of it, for sure. And like I say, the general rule of thumb, and as we all know, nothing is 100%, and the market and technical analysis are pretty much anything. In general, it goes to usually continues in the same direction. So yes, most likely we will bust out to the upside. We could roll over though, but the odds are we'll bust out to the upside and continue this rally.
All right. Now, so that's SPY. Did you want to hit on the Qs, or did you want to jump to IWM?
We can do Qs. Qs have traded above that previous high right now. So now that we've surpassed that, actually they're also consolidating here, just above that previous high. But same idea. It's a little bit wider of a box range, but same idea, consolidation. Like I said, they have pretty much traded, they're still right around that. A lot of times when you hit a support or resistance level, you can trade around it, right? Up above it, down below it, and just trade all around it before it decides which direction it's going to trade. Same idea though. And on the Qs, I have resistance up here, 401.5.
All right. Now, here's the one that I think is kind of the most compelling is the Russell 2000 IWM.
I agree. It has been battered down, has not really participated in this this comeback rally we've the other two have had since October, I guess it is. But it is showing promise here. We have a bull flag on IWM. And same idea, the bull flag is a consolidation to gear up, a breather, a pause to gear up to take that next leg, in this case, higher. So in IWM, that's a really perfect bull flag right there. And we're looking to bust out beyond the 188 and trade up to 190 will be this previous high right around 190 will be a little bit of resistance, and then move on to almost to 199, almost 200. older high that came in July.
All right. And we're gonna circle back more on the Russell 2000 in a little bit. But let's close out with crude because it's been getting
Oh, that's
thwacked.
right.
Yeah, the crude has been getting
It has been
thwacked.
hammered, hammered. And everyone, it's kind of, I don't think it was expected, with the
Yeah.
wars and everything else. They expected crude to rally, and it completely did the exact opposite. But this was a head and shoulders top and crude. Now, if you take the top of the head with the neckline and subtract it from the neckline, it takes you right there. And it has completed the head and shoulders pattern target price. And now it's at the bottom of my pitchfork. And right there, we have a really nice doji, which could possibly mean I have support here in crude. We have the doji yesterday, and today we have a little bit of some confirmation that we could possibly bounce from here in crude. Possibly. I need a little more evidence.
Well, sometimes wars end up with buy the rumor, sell the news, right? And on next week's show, we're going to talk about another big buy the rumor, sell the news type of trade that we're currently in the rumor. So I just want to tee that up for everybody. You don't want to miss next Friday. We've got a big one for you. But let's, Licia, thanks for breaking those down. Let's break down some I think big news. Now, just an update on non-farm payrolls. Now we're down 3. We had a wild move, and then so basically we got a giant sell order. That was probably machine software reading the headline that dumped, and then somebody with an actual brain looks at it and goes, well, that's a dumb reason to sell, buys it up, and now we're flat on the day.
Yep.
And
Sure.
it's interesting. The options were really not pricing in a big move for today. We were up $36 yesterday in the S&P 500, and options were only pricing in a $32 move for today, which I thought was way too cheap. Now, if you traded the non-farm payroll number, you already made your money because that was a $35 move up and down.
And as we've seen, that could be it, right?
Yeah.
Seriously, that could be it. We could open today and sit here.
All right. So with that in mind, and just a real, so that's ES, that's the S&P future. A little update on the NASDAQ 100 is down 65 points. The Russell 2000 is up 12.5. So the Russell 2000 continuing our rally. And the big one everyone wants to look at and know about the bond market. Bonds are down. That is bonds down is not going to be great for the S&P 500. All right, so with that little update in mind, let's hit on what I think are 3 of the more interesting headlines from today and last night beyond earnings. And the first was Broadcom earning. Oh, and to do that, let's bring on our the president and chief option strategist of Option Pit, Andrew Giovinazzi. Andrew, thanks
doing?
for being
Good
here.
morning,
You can
Andrew.
lose my screen.
Oh, there I am. Okay, I'm on. How are you guys doing?
Doing great. Thanks for being here. Like you had a choice, but thanks for being here. And
hey, Mark, don't you remember your famous "up on the day"? Oh, it was.
Yes.
The futures are just green for a second.
When I was on the floor of the Amex, there was a guy named Matt Joyce, and it'd be 12 o'clock in the morning, in the afternoon. It'd be noon, and we'd be down whatever, and he would walk around going, "Up on the day, up on the day." And lo and behold, a lot of those times we would rally, but Matt was a good guy, RIP. So Andrew, I want to start with Broadcom. They reported earnings last night. That's AVGO.
Okay.
They reported earnings last night, and at the time that they reported, they really did not like the earnings. This morning, it is kind of pricing like pre-market last night. It was down big. They've actually rallied it back. Their conference call must have gone pretty well because pre-market it's flipped from was going to be a really bad day to going to be a good day. Obviously, the chip sector is so huge right now. Everybody's paying attention to it. AMD out yesterday with that new chip.
Right.
Nvidia, is going to the moon. What's your reaction? What's your guys' reactions on Broadcom? Do you have an outlook here? It's one of the chips that's really pulled back over the last, since the 20th.
Right.
Broadcom is off 10%, almost 10%. Nvidia kind of a not quite as bad, but close to 10%.
Well, I think you can't get in the way of them. I mean, they sell off and then they pop right back again. I mean, look what's happened the whole year. So if you look at Broadcom and then after hours, all they did was buy it up again. So, I mean, look at the market today. It's the same thing. There's sell-offs don't hold. Licia said it earlier. So like the chip sector, I'm still, I'm long SMH, a bunch of chips, AMD. Why sell them? That's my point. So I think for right now, until this AI narrative goes away, you set up to buy dips. I hate to say it, but
I have to say that
it's pretty good strategy.
Yeah.
That whipsaw on AMD in the last 2 days was incredible, I thought.
Yeah.
I thought for sure it was selling off.
I've got a chart of it here.
Bam. That was a huge. Wednesday was a huge reversal down, and then Thursday, holy cow, it came back with a vengeance.
So that it just tells you any AI news is anything related to the future is gonna just win on any day. And I don't see that stopping in the short term.
What I thought was surprising was, so AMD gets this nasty rally because they've got their Nvidia killer, right? And you know what? You know what else went up yesterday?
Nvidia.
Plenty of demand, right?
There's plenty of demand, but you look at the PEs on, I used to just sit there and make fun of the price earnings ratio on Nvidia. It needs to, in order to get a reasonable price earnings ratio, their earnings need to quintuple and the stock needs to go nowhere.
Wow.
In order for them to get what would be about a 25 PE, something in line with Microsoft or Apple.
Right.
And then I was like, well, I just in the back of my head, I'm thinking, well, AMD's probably got better than that. Nope. Like 300. So AMD's earnings would need to 10x to kind of fall in line. Now, I am going to tell you guys about a chip stock that I think has huge upside here in a little bit that does have a reasonable PE and I think has huge growth opportunities. But let's start with, let's hit on the next piece of news, and that is retail. Now, Lululemon, which is, I put that on the high end side of retail, of the retailers, wouldn't you, Licia? It's definitely not cheap.
No, it's not a cheap store for sure.
Yeah. And then RH, which is formerly Restoration Hardware, certainly not cheap. If you meet somebody, they're like, "Oh no, I bought my." If you meet somebody that buys all their furniture from Restoration Hardware, they're either A, incredibly rich, or B, loaded with credit card debt.
They spend a lot of money. Yes.
I've got RH up if you want to see it, but it's been making a little move, but not today. Today is not a good day.
Yeah, RH.
Lulu Slam.
Yeah, pre-market it's down $25. And Lulu pre-market is down about
12.
Yeah, down about 12. Both reported bad earnings. We saw good earnings out of Target. Decent earnings out of Amazon had good earnings, but you got to wonder whether the high end, whether we're starting to see Macy's had good earnings, Nordstrom not as great. You got to wonder whether there's maybe a little bit of rotation out of some of these super high end and into some of the lesser brands. So like Gap, GPS, they had good earnings. Their Athleta brand is a competitor of Lululemon.
Yes, it
but
is.
is less expensive. So if a pair of yoga pants is 120 at Lululemon, it's going to be $75 at Athleta. That
It's
is
also 100% up this year, Mark. Gap.
I think you're pretty spot on those prices, Mark. That's pretty good.
Well, I know my yoga pants.
He follows him around the house. That's the
problem. Yes. I follow a pair of yoga pants everywhere around the house during the day. So
what happens when you're married to big blonde hair, you follow the yoga pants.
So what I would say is, Gap's up 100% on the year, but that's like me coming to you and be like, yeah, Andrew, my portfolio is up 100% this year. And then you look at me and go, yeah, but you were down 80% for the last 8 years prior.
Right.
So, it's
I mean, if you're going to say breakout for Gap, that's a pretty good one.
Yeah.
All of a sudden, there's some reality there.
Yeah, I mean, frankly, I've got it up on a 5-year. It's actually starting to get back into an interesting range. But those Lulu earnings are definitely one to keep an eye on for. And RH, is that kind of a little kink in the armor? All right, now lastly, and I wanted to circle on this. Goldman was out yesterday saying the small cap rotation has room to run. So what they were saying is IWM can continue to rally and outperform the S&P and the NASDAQ 100. Now, normally when Goldman comes out with something like that, it makes me worry that they're selling selling futures.
They're selling into it.
They're selling into it.
Right, for sure.
But which would be classic Goldman. But, I look at, kind of the performance of the indexes on the year. Mm-hmm. And the two indexes that I think that have not even approached their highs from July, right? S&P has gone right up against it. The Qs have gone through it. Still way off those highs are IWM. And if you don't like the small caps, then you could look at MDY, which is the mid cap.
And NDY?
MDY. Mike Delta Yankee. Okay. This is the S&P mid cap. So these are bigger companies, but not so there's the Russell 1000. So the mid cap, I think, is the after the first 500 in the Russell 1000, it's the next 400. That it's the 400 next biggest names. So it's named 501 to 900 in terms of market cap for the overall market. And MDY and IWM both, I think, have real potential for upside. IWM obviously more liquid than MDY. A lot of people don't know about the mid cap. It's kind of like everyone knows the broad market S&P and the small caps. It's like the mid caps are the well-adjusted middle child.
And it definitely has that same bull flag.
Yeah. So I like both MDY and IWM as potential bull plays. And with that, let's kind of talk about our 3 play ideas for the week or maybe into the end of the month. And I want to start because I've got a stock. I teed this up. I have a stock that I think is going to go much higher, and it is Qualcomm. Qualcomm's got a chip coming out to compete for laptops with Intel and Apple. and they also do a ton of chips and chips for phones, all kinds of things along those lines. I was sitting down with some semiconductor developers, and they were both like, "Yeah, Qualcomm's for real," and its price earnings ratio is only 58.
Wow.
All right. Whereas that's Lulu. Sorry. That's not Qualcomm.
I think it's lower.
I'm sorry.
It's like
the
15.
price earnings ratio is only 20. Thank you. That sounds a lot more normal. The price earnings ratio is only 20. So it has a lower PE than Apple. Apple's PE is 31. Nvidia
who knows? 100, 200, 500.
They're saying Nvidia's is 61 now. I think that seems a little off to me,
right.
but Qualcomm's PE is only 20, and I know it's had a nice little run back to 130, but if they're going to create a chip that people really want, that PE is going to expand to about 35, 40. That would mean over the next 6 to 12 months, it could pick up 50%. So it could potentially be threatening its all-time high. Licia, what stock are you on top of?
I agree. Qualcomm looks like 139. It could go back to. Excuse me. My stock is Riot. As we can see, Bitcoin. Riot moves along with Bitcoin. I'll share my screen. It's had a little bit of a pullback, but as you can see, this is changing. Bitcoin, here's the chart of Riot. Bitcoin's had a little bit of a pullback, which caused this little bit of pullback after the gap. And Riot, now I like Riot above 15.5. I would wait for it to trade above 15.5 before I were to hop in. Here's Bitcoin, as you can see, bull flagging also. It's got some resistance there. That's why it's pausing. But I think Bitcoin and Riot will rally from here. I think Riot can definitely come back up here and test this consolidation area up here right around 18. So I would wait till it closes above 15.5. I have resistance right in this area, and watch for a close over 15.5 in Riot and hop into those calls.
All right.
And it's off to the races?
I believe so.
All right. And now Andrew's going to share his pick, but he's going to do so. Alicia and I are going to take a little step back, and we're going to give Andrew the corner because it's time for Andrew's trading vehicle. He is going to wrap his trading idea and his trading strategy into a little 5-minute education session on how he picks a trade. So each week, Andrew is going to walk you through a directional or non-directional idea that he's got and how he picks that approach. So Andrew, we'll go back into the ether here for about 5 minutes, and you take it away.
Take it away, Andrew.
Master of Education.
All right. Yes. Director of Education. I guess I should do some educating. So here I have a chart of Chewy, which Mark and I both thought would be the easiest put right in the world. I think we sold the 21s. I think he sold the 20s. And right now we're kind of bag holding, not bad, but it definitely, it's not making money yet. So the thing is, my vehicle is Chewy. I do think it's a profitable internet company. So I think eventually it'll go back up. So the issue I have is I own some stock, and I'm deciding, do I keep the stock or do I put a trade around the stock? Or if you're new today, do you get into it at this level? So kind of what you're doing is you're trying to say, clearly the stock has been going sideways though for a while. So the first thing I look at is, what do I think will happen? I think it's going to go sideways. So for me, a sideways trade, I want to try to bring in some bucks. That's number one. But on the second hand, I think we do have a little shot. I don't think the earnings were bad, again, in my opinion, but it could make a run to 22, something like that, in the next couple of weeks, especially if the market catches a little pop. So what I have here is I have very, very technical charts for you to look at. So what I do is when I'm looking at a trade like this, I look at two different trade types. So the first one is if you're looking at it cold, meaning you don't have a position, but you want to get into a position, a diagonal calendar put spread would work. So what I'd like to do them for is a credit, which means I'm going to buy a put that's farther out of the money, farther out in time. And then I'm going to sell a put closer to the money, closer in time. And what that's going to do is if I run through my short put, it would put me into the stock at a lower level. However, right here, you can see if the stock just kind of does this meander thing and goes nowhere, I can make some money on the credit in the spread in the meantime. So it's what I would call the diagonal is it's a meander trade that I eventually want to buy the stock. So this is what I do in like an IRA. My IRA is where I want to like accumulate shares. But if it doesn't get down there, I just take the premium in the short term. So that's door number one. Door number two is kind of what I've done because if I'm looking at it today, I would probably choose the diagonal for a decent credit and try to take the stock in the 18 level. If I had, this is the trade I have on now, I'm bag holding some stock around 20-ish. So I own the stock already. So the stock gives me one long upside call synthetically, meaning like when you're long stock, you're long call, short or put synthetically. So I know I'm already long one call. So what I'm going to do is I'm going to overlay a ratio call spread on that. So I'm going to buy one call and sell two for tiny dollars. I paid like 14 cents for it. So if the stock goes to my target, I essentially, that makes me long twice the delta I had before, or essentially long 200 shares. So I'm paying almost nothing for the shot for it to go to 22. Now, if it takes me out of 24, I'm okay with that, right? If the trade's still going to win, I'm still going to have a net, that would be like a 20% gain net on my equity. But if it does nothing, it kind of just floats up there. I'll make a little money anywhere in this area, but I'll make extra money over my stock because I really don't want to get rid of the stock. I think it will go much higher in the future. And if I get taken out at 24, I will just restart rewriting puts again and try to get the stock back. So when I look at a stock that's kind of going sideways, I start looking at my two choices. If I'm doing it from a cold start, meaning let's say you just saw this today and you're like, oh, okay, Chewy might go up. You look at your diagonal spread. If you have a trade and you're looking to juice the upside and try to get double the delta for no extra dollars, what you do though is you give away the home run. I don't think Chewy is really a home run unless somebody buys it out, which is possible, but I'll still make money on the trade. So, as far as I see it, I think that's those are sort of my choices here for what I would call a more vanilla trade. This is not really a trade. It's more like an investment. And when I look at strategies, the easiest thing to think of is the difference between a trade and an investment is if I'm trading, I don't expect to take delivery. I want to trade my options, get in and get out. I don't want to turn a short-term trade into a long-term investment. That's the way you get run over. But investing is totally different. If you're an investor, you want delivery at some point. So the type of option trade you're going to put on to take delivery, the diagonal is a good choice because it's possible, depending on how aggressive you are, you're going to get delivery of the underlying. If you have a 1x2 spread, you have a good shot to be taken out of the trade. And then you're going to have to write your puts to get in. But then you're back to creating some kind of income stream in your IRA. So you're deciding, one, am I trading the underlying or am I investing in the underlying? And that helps you decide what trade you want to make. And the best advice I can give is you think Apple is a great long-term buy, just for instance, but you could go broke trading short-term calls out of the money that go worthless. So you don't want your long-term investing thesis ruining a short-term ruining a short-term trade, because you can go broke buying short-term options. So again, it's the easiest way I know to separate your investing brain from your trading brain. And you'll probably be happier in the long run. So that's basically my Andrew's Education Corner for this Friday, just looking at Chewy. And this is the a lot I have. And this is the position I've chosen. So we'll see how it works. Next week, we'll say, hey, did it work out? Did it not work out? Do we make extra money? What happened? Inquiring minds are going to want to know. So at least for me, that's it for Andrew's Education Corner.
All right, Andrew. Thank you. Great educating.
Very good.
You're welcome.
Great educating. Update on futures. We're now down about 6.5 in the ES. NASDAQ futures are down 70. Russell futures are still up about 0.8%. So we're still bullish. So we got about 6 minutes left. I'm going to break down real quick and I want your opinion on this one. I want to break down some what we call order flow. So every week I'm going to bring in a stock or index that has had some really interesting order flow in the options. And this week I'm talking Truist Financial. Truist Financial is old Sunbank and Wachovia merger. SunTrust Bank and Wachovia merged and formed Truist Financial. And what we're seeing is option traders that were right continuing to press. So yesterday, the biggest trade in Truist Financial was a sale of 10,000 of the Jan 32.5 calls. Those were in the money. And they closed those at $2.55 and then bought Feb 35 calls for $1.58. The day before, almost the exact same trade went up. They sold the Jan 32.5 calls at $2.63. And then they executed the 35-37 call 1x2, 10,000 by 20,000. So little different approach, but still a big bull call roll. And with the 10,000 they bought yesterday on that roll, they're now basically long the 35-37 call spread. I'm looking at TFC and this bull order flow. And then I look at the stock chart and, let me go to a 1 year and, it's had a nice run, but when you look at it on the 1 year, it has a lot of ground to make up to get back to where it was before this mid-cap banking crisis happened. So, Licia, I don't know if you've looked at the chart here on TFC, but do you have any thoughts on TFC?
I'm looking now. I'll share my chart, my screen. It has broken out. It's broken out above the previous highs. You have this very nice volume profile that's going to provide support. It just popped out above there. See this consolidation?
Mm-hmm.
That was a bull flag off this very bullish day. Now you've popped up above there. Looks to me like you're going to trade higher. On your weekly, you're coming up on the 50-day, so you may have a little resistance there, but it looks like it's ready to break through there. My pitchfork needs to be updated, but I need to add another one. But yeah, I'd say it looks like it wants to close this old gap over here. See that old gap that's never really been closed? Yeah.
Right where that trader has his short calls, which would make a lot of sense. These guys aren't normally wrong that trade 20,000 lots, guys.
Looking bullish for sure.
So is that a 1x2 call spread? Did they just listen to my little session on 1x2? No way.
Either that or they wanted to own the 35 calls for cheap. Mid-cap banks can be a little boring, but with where they are from a price perspective, that's probably my second best. That's my TFC, FTB, and Comerica. You have to be careful with some of these banks. There are cruddy ones in the KRE index, but there's some really good ones in there. TFC, FITB, and Comerica Bank, CMA are probably my three favorite. All right, we've got about 2 minutes left before we wrap things up and get ready for the beginning of our trading day. futures are still, the Russell's pulled back a little bit. ES still down about 8. What are you going to be kind of watching for today as a trader, and what are your guys' approaches going to be to trading this week or on Friday?
I have a lot of calendars on, so 4,600 would be a really nice place to land for me. So this where we are right now is good. I was kind of liking this 40. We were 45.80.
Yeah.
45.80 or whatever for for 458 SPY. Sorry, I was trying to translate. So that part I think we're kind of, at least today I think we cruise. If anything, we sort of hover near, but probably don't get over 4,600. And we got to wait for the Fed to speak on Wednesday. If you note, in all of the major indexes, all the vols are up over the last week. And with the market kind of going sideways with vols up, generally that means, like Licia said earlier, we're kind of primed for a bigger move. Don't know where exactly, but with vols up, traders are definitely looking for a bigger move than a 13 VIX. That's what I would say.
Mm-hmm. Licia, what are you watching out for today?
I'm thinking that it feels like the fireworks are over on the non-farm payroll. Sadly, we hate to see it happen while we're not participating, right? We want to be involved. But I think it might be over. We might have another quiet day today. We may not break over that until we hear from the Fed. We may have a few days of wallowing, a few more days, Other than that, I'm still watching crude, and I'm thinking Oxy could bounce from here.
Yeah, Oxy.
Yesterday. I wrote about it in Profits and Pubs. I think Oxy may be bottoming here. I need a little more evidence, a little more upside here, but I'm thinking it could have bottomed here.
Yeah, and I want to see what happens the first 15 minutes, but my take is that we're gonna end up meandering higher. They've been buying these dips every day. Yesterday's high in SPY was what? Yesterday was the 7th. Yesterday's high was 458, 458.83. I wouldn't be surprised to see us get to retest 459 today for SPY again, and to see the market kind of just meander kind of boringly higher. But that's probably going to be my approach on the open, is to play, at least initially, the market to potentially get a little bit of a rally. All right, folks, it is 8:16. If this is your first time seeing us, and I hope you enjoyed the show. Licia, myself, and Andrew, and my whole team, we're writing content or producing video every single day. Head over to optionpit.com. I do a newsletter called The Trader's Edge that comes out just about every day. Licia writes a newsletter called Profits and Pumps, where she breaks down charts. It is a phenomenal read. Andrew puts out great content as well. Head over to optionpit.com. And if you have questions for us, feel free to email us. Any questions you have or things you want us to discuss on next week's show, you can email my team, support@optionpit.com. So for Andrew Giovinazzi and Licia Leslie, I am Mark Sebastian. I like to sign off with your only option, although we're
sounds good
here
dude.
with 3 option traders.
Keep it up.
I hope you guys have a great Friday trading, and we'll be back with you next Friday right here at 8:30 a.m. Eastern time. Everybody have a great and happy Friday and a wonderful weekend.
TGIF.